Hey guys, another Wednesday is upon us. Unreal. It is unreal how fast the time flies. I was on the last live stream this past Sunday. If you don't know, I run a live stream on Sundays evening, 6 p.m. Pacific time. And we talk a little bit about options in the stock market, but a lot of times it's just a lot of fun and laughter and some people get offended and some people unsubscribe from the channel and blah, blah, blah. But there was a point in last live stream where I looked at the charts on the Qs and I said, man, that thing could possibly run. And run it did. I do expect some consolidation here. It's a little hot for everything that's going on in the world, right? And in our times, inflation and interest rate hikes and, conflict and all that. So expect this type of, I expect, I'm not going to tell you to expect it because this isn't financial advice, but what I expect is a lot of big spikes in both directions. So, you have to take your opportunities, when those things happen. So what does that mean for me is that on big spikes, I will take profits off. I will close positions out. I will take profits. And on the big spikes down, I will put premium on. That's as basic as it gets, really. And you'll see that's pretty much what I did here. So those who don't know, I go through 5 trading days of trades here from the previous week's Wednesday to Tuesday close. And I share it all, buys, sells, profits, losses, rolls, all that good stuff. So if you're new here, like, share, subscribe, do all the good stuff. Leave me a comment down below. And we'll get started. Also, I'm going to go through kind of my ARK-K position. Someone had a question about it on my last video about profits and rolling and all that stuff, and I'm going to try to address it a little bit here. Hopefully, I'm able to do so. But let's just get to it. So, last week started off. Last Wednesday started off the 23rd. So what did I close on the 23rd? Nothing. But on the 25th, I put on a, wait a second, have I got the dates wrong? No. Yeah. The 25th, I closed, this was only like a 2-day trade. I had tried to play Carnival Cruise Line earnings. I thought it would tank. I thought it would sink, no pun intended. So I bought a put at $18. It was just kind of a gamble lottery play. I paid $33 for it. Carnival Cruise Lines ended up not tanking, and so that ended up being a total loss of $33 in 2 days. It was just I was just trying to be cute, right? What else did I close? On the 28th, which was Monday, I closed my covered call on Camping World. Closed that one out for 6 cents, made $51 in that in basically 3 weeks. Closed out my Intel puts. I had two $40 Intel puts that I got $120 for. I closed that out for 12 cents, made $95 in 12 days there. And then ARK-K, big spike up today, Tuesday. So I closed down the 760 strike contracts I had for $1.16. Essentially a 50% profit there. So total of $820.19 in profit in 7 days. And that's it for the closes. So we'll go over that ARK a little bit more. We'll go back because I've been dealing with this since December 1st. I looked it up and we'll go through it again. But let's take a look at what we opened. So I said, what date was it again? Darn it. The 23rd. So on the 23rd, there goes that CCL that I opened and closed, or I actually didn't close it. It expired. Worthless. I opened a Best Buy on the 23rd. Best Buy, I did an 85 strike, got $105 for that out to April 29th. Sold one contract there. On the 25th, I sold TQQQ. I sold the 40 strike, two of those for $101 a piece. Dutch Bros, put on another Dutch Bros, went down to the 35 strike, out to May 20th, and got $90 for that one. And then on Monday, I opened a XRT. That is the retail ETF. It's not S&P, but it's the Spider retail ETF. And I went out and put the 65 strike on and got $95 for it, out to May 20th. And then today, because I closed out the Intel put, I wanted to play Micron. They had earnings today. Now, I normally don't play earnings, but I did it in a way that would give me some protection if it went down, and it didn't. So what I'm about to say is kind of a moot point. So what I did was I bought a put spread. So I bought a 77.50 put, and then I sold the 75 put, and that costed a word? That cost some money, right? But I financed it with these two 65 strike puts on Micron at $93 a piece. So if you add that together, it's a net credit of about $1, about $100 minus fees. It's about $98 credit. Now, what that would mean is if Micron were to go down to 65.01 on expiration date of May 20th, this would profit about $250, which is the width of the spread. And then you would, if it's at 65.01, these would expire worthless. But if they were to go down and get assigned, I'd have to buy at $65, and this would expire worthless and profitable as well. So the downside is protected up until the strike that you have to buy at. You actually make more money if the stock were to go down. That was the point of this trade. I did a video on this one. It's called Getting Paid for Insurance, and I'll link it up there so you can see it. Also, Thumper did a video on it. He probably explains it way better than I do. But that's basically, it's the same thing. We did basically the same subject, and he probably explained it way better than me. But you're basically buying a put spread financed by the put down below to give you some downside protection, and you receive a credit. So I received a $100 credit to put this on. Now, that being said, Micron ran up after earnings, so this is probably going to be just max profit, which is $100, but it'll be out to May 20th. Hope that makes some sort of sense. I'm probably explaining it all backwards. Now there's the ARK-K. I took the opportunity because I closed out the ARK-Ks. Where'd they go? Oh, I sorted wrong. Oh, that's okay. But I closed out those ARK-Ks, and I opened up 7 more, but I was able to get down to $57 on the strike out to May 20th, and I collected additional credit, $1.46. So there's $1,018 in ARK-K so far, which is not bad because we'll go through the history here if you just hang on. We'll do that at the end. So that's it for opening. Now let's take a look real quick at premium cooking. So real quick, week ending Tuesday, March 29th, we closed 5 positions, opened 7, realized profit of $933.22, sold premium of $1,474.31. Total premium cooking is very light right now. I really need to get some stuff going on here. $2,593.95. Maintenance margin of $21,100. Why is that so high? I think it's because just the TQQQs A lot of those are a little bit higher on the maintenance margin. Buying power usage 17.1%. Cash balance went from 81,902 to 83,049 because we did receive some dividends too from QYLD, RYLD, XYLD, and Camping World. I was right around 350 bucks, something like that. No deposits, no withdrawals. Net liquidation rose up $2,000 to 123,000. Return on maintenance margin 4.99%. That's the profit realized divided by the maintenance margin of last week. And then return on net liquidation 0.77%. That's the profit realized divided by the net liquidation of the previous week. So how did the overall, like I said, I need to put some more stuff on. If you see April, I only have, $800 roughly total in premium. I probably should build out if I can find something to put on for April. And then May's already being built out at 1,500. So how did we do overall? Well, we're back almost flat. Finally. I think we were down 10-11% at the worst, at the peak. But now we're down to, we started the year 123,100. Now we're final value as of yesterday, 123,000 for a minus 0.08% decrease. Pretty much handily beating all the indexes so far. Oh man, why'd you go and do that? That was the Dow Jones, I believe. Let's take a look at the Dow Jones. Year-to-date, Dow Jones is down 3.53%. S&P's down 3.44%. NASDAQ still down 7.66%. And the Russell still down 6.14%. So very, very nice turnaround. And hopefully we can keep it going. Like I said, though, I do expect a lot of volatility up and down. So you just got to be ready to take advantage of those things. Now let's take a look real quick at the ARK-K and see if we can make some sense of this. Sort it here. We'll go to ARK-K. When I first rolled out, it was December 1st. Right there, it was $105 strike. We lost 241 bucks. I think I had two of them on. That's this 90 that I closed out for a profit. But you can see there was, taking profits, then taking losses. Right there, we went to 90, lost 676, went to 85, lost 559. But you'll see that the premium collected covers the exit price. So if you look at right here, 812 and 190, we went from a 90 to an 85 and a 69. So that's a $9 that's about $10 in credit versus that $9.62 exit price. Okay. But if we looked through this whole thing, you can roll. That's why I don't like calling things rolls, but I understand it because everybody understands rolls for the most part. You can roll a green position. A position doesn't have to be a losing position for you to roll it, right? So if we look back, March 18th, I rolled my 60 strikes when I went to 7 contracts. We originally got $3.59 premium for that 7 contracts, which covered the losses that we took previous, but we were able to buy that back for $243. So we profited $812 off of those 7 contracts. But then we rolled it to the same strike, but out a week for $283, which was more than the exit price that we did previously. And then we were able to close that out for $2 and pulled off $83 per contract of profit off of those. And then we rolled it the same strike another week, and we got $2.33 premium, but that covered plus some the exit price that we exited the week prior. So that's when, which was yesterday, I was able to close those for a 50% profit, which was $1.16. Profited $8.20. But then, like I said, we did today or yesterday, we sold the 757 strikes at $1.46, which covered the exit price there. So if we took all from December 1st, when we closed the original put, and added all those up, I could have actually just closed the position out and walked away with a profit. Because right now, if you add all those up from December 1st, I already did it, just pasted it all into here, we're at $574.90 in profit. Okay. But, me being a greedy capitalist, I want more. We want more. So we're continuing to hold this position, and we have $1,000 out there cooking now. So the next cycle, the next run up, if there is a next run up, I'm comfortable at 57 right now because we're sitting at 71 on the ART Ks. If it retraces back to 60, I'll consider rolling again. But you can forever roll, and you can forever get a credit. You can, and when the market volatility spikes and you can get squeeze profit out of these positions, you can just keep doing it, right? So, but I have a feeling if the market runs a little bit more and I get some profit out of this, I'll probably close this down and walk away from ART K finally. But the good thing is it is now finally, since from December, in a profit. I just would like a little bit more out of it. So I hope that helped. Like if we went into into Interactive Brokers, right, you'll see those 7 contracts I sold today of ART K, May 20th, 22, and 57 put. It's sitting on unrealized profit right now of $44. So I could technically go in, roll that. Let me see if I can move this. Can I move this? Come on. It won't let me move it. You serious? Okay. Let's do it this way. I can buy this, whoops, not 60. I can buy these 57s, right? I can buy 7 of them. And I think it's acting funny because it's after hours, because it's not really moving. And then I can go to June and I can sell the same strike, 57. And now I can end up with about $500 of additional credit, but it will also make me realize the $44 of these May contracts. I hope that helps. I'm kind of probably stumbling over what I'm trying to say, but I hope that helps. You can roll positions that are in the green, take the profit, and then basically what I did was whatever it cost to close that, I rolled into the new contracts. So I hope that helps. It probably didn't, and I probably confused you even more. And if I did, I'm sorry. But anyway, I hope you guys are doing well. I hope this market's treating you well and everything else. And hope you have a great week of trading. Like, share, subscribe, do all that good stuff. I'd appreciate it. Join us on the Sunday live streams. Most people, I get at least 1 or 2 people to unsubscribe on those live streams. So if you're easily offended about some things, certain things, because it's kind of unrestricted, unedited, uncensored type of thing. And, maybe don't show up. Hope you guys have a good one. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.